Hi, Jonathan York from IRG BOP. Well into the reporting season here in New Zealand now. So far it's been a little bit of a mixed picture. We saw steel and tube down over 60%, which was a little bit disappointing. Telecom's result, despite showing a profit, was probably a little bit misleading because that was basically through cost cutting, and we've still yet to see the full ramifications of the XT outage and how much that's going to cost, one in monetary terms but also in client loyalty as well. We've further seen freightways, which was down 14%, and that's seen as a reasonably good barometer for the New Zealand economy. Certainly their guidance is still looking for a reasonably tough next 6 months, and the recovery is a little bit patchy out there. But there is a recovery, and still look for the markets to try and push on wherever possible. Dominated by Greece. We've seen the right rhetoric coming out of the EU, but as yet we've seen no final details as what the sort of rescue or aid package will be for Greece. But interestingly to note that a lot of the premier bond funds have been buying Greek debt as it's been falling over the last week or so, which would seem to indicate that they don't think there'll be a default, and these bonds indeed do represent some good value. Also, as well, just on the global economy and the potential recovery, interesting to note as well that shipping costs have increased substantially over the last 2 to 3 months, and are currently running about 10 to 15% higher than they were third quarter last year. That's a reasonable indication that there is good demand out there for commodities and resources, which is obviously being driven by the global economy. So how can we take advantage of this? The present stock markets are a little bit nervous and do seem to react to negative news. But given the positive outlooks, as I say, for recovery going forward, still think you've got to look to buy dips and just be patient and don't get frightened by any sell-off. Overall, most analysts are still looking for share markets to close the year higher than they are at current levels. Also, as well, on a more sort of global front, if you do believe the economy is going to recover, you're looking at resources and the global economy. The recovery will be driven from the Asian sector. OMIP have a current offering out there which has the main driving fund, which is the AHL fund, and then as a bolt-on it has the RMF Asian Opportunities and the Commodity Strategy Fund. That also has the benefit of a capital guarantee from NAB out of Australia, and also has a rising guarantee as well. And certainly if you look at it, OMIP products have got a proven track record of providing good returns over a medium to long term. The AHL fund in particular, since the inception in 1990, has averaged just over 15%. So that might be worthwhile looking at, and give us a call on 0800 867 323 to discuss these investment opportunities. So call us on 0800 867 323, free risk statement available, or go to the website www.irgbop.co.nz. Lots of interesting articles, investment opportunities, and we look forward to speaking to you soon. Thank you.